Good afternoon, guys, and welcome to this debrief. I hope you've all had a good day's trading. Let's get straight on into it. Today I'm going to be bringing you more of not so much a setup that you can use and execute every day, but more just kind of an example of some of the conditions we're having at the moment and some of the things that I'm struggling with personally, and how you kind of have to be a bit more flexible with how you're trading. And just how you have to adapt to the conditions. So let's just quickly get into the charts. This was taken from the 21st. It was UK CPI, and it came out as a strong beat. And the area that we're going to be looking at is around 930. So it was in here, this area in here. I just want to focus on, so you have the number get released, you have the initial kind of sell-off in here, from here downwards, then you have this really big rip, and just how I kind of manage my trade in here, and how you kind of need to be you can't really have like a perfect trade in this situation, guys, especially how we're trading at the moment. It's just really tricky, and just how we kind of then trade out through here, and then how you make a sort of a rough trade, kind of you kind of work around it, and you make it slightly better. So without further ado, let's get into the ladder. So as you see here, I'm short 30s and on the back of the number, and I've kind of, not going to lie, it's been a bit of a panic trade down at the low. And you've seen the number, you've seen this kind of sell-off, you had a little bit of a pullback, and then you've had this kind of real aggressive move down, and then you get everyone who isn't already short selling this low into here, selling into this region, and then you kind of get the big squeeze up. Sorry, the video stopped playing. So you get the big squeeze up, and then this in here, it's like this is just kind of all done on no volume though, this kind of move up here. So it's just about understanding, right, how can I then, you know the figure, you've got a bad low here. Let's see if I can, so you have I can't play the video whilst. So I'm saying, as you can see with my arrow, guys, here, hopefully you'll be able to see, it's kind of badly traded out low here. And you're seeing the kind of offer getting pulled, but there's nothing really trading lifting the prices up. So you kind of, you've got a fundamental reason to be attacking the low. You have a price action reason in terms of, poorly auctioned out area. And then, so you have a few things to lean on. So you've seen it just rip up now, no volume, you've seen no size going through, small clips, 200 lots, that's probably the biggest size we've seen go through since we've seen it bounce from the lows. So when I'm in a situation like this, what I'm looking for is, right, so at what point does this squeeze in here exhaust itself, or at what point does there a passive seller step in again and then turn aggressive? So you're kind of, don't get me wrong, you kind of, maybe I perhaps should have got out, I either should have got out of this trade a lot quicker, or I should have just hang on to my size on the initial short instead of now scaling out, knowing that I'm then going to try and look to get back in again, if you understand what I'm saying. So as you see here, I'm trying to work out some of my position, I'm trying to scale out. I've gone offside now, I've seen, and now I'm just kind of like, so I'm going to leave something on, and just so I can now sort of let the market re-auction. So you've had this kind of no volume rip, but then you're going to have a period of time where it actually finds an offer or a bid. So is it either then going to, reject this low and take out these previous highs, or are we going to then sort of, hold an offer, then roll over again? So like I said, guys, I'm kind of, you got the fundamental reason in the back of your head, you got this poorly auctioned low, you're looking for some sort of entry here. So you've just seen, you've seen a bit of a reload on 37s, then you've seen 36 go offered, 35s go offered on, they've been clipped down, and the bid's getting pulled now, as you can see. You see the bid gets pulled again, 34s, bid gets pulled again, 33s. Size coming back in, you're seeing clips down and then reload, you're seeing clips down and then reload. So you've seen that from 37s down to 33s. So you kind of got some sort of area to work in terms of risk now, so you don't really want to see prices back above 37 if you want to kind of stay true to the short. So as you see, you're kind of seeing the prices distributing here a bit again. You're seeing 300 lots trading to 34s, and now I'm sort of willing to step down to 33s. Any clips down to 33s, I'm willing to sell into. But I want to see size, guys. So I haven't seen size. Notice how I don't clip 33s there, just purely because you've only seen 74 lots trade into it. I want to see 200 lots, 250 lots trade into it, and I want to see size trade into 34s. I want to see someone actually sitting there saying, yes, I want to take fours, and then I want to reload and take 33s. So we're starting to see a bit more size trade 33s now. Notice the whole, we're holding a firm off of 34s. We've seen the initial flip up to 37, and then we're kind of seeing this firm off of 34s now. So any clips down to 33s, like I was saying, guys, I'm willing to sell into. So now you're just seeing aggressive selling into 32. So I pay down 32. You see 500 lots clipping to 32s. Stop goes above 34s now. So you maybe start scaling out above 5s, 6s, hard stuff above 7s. So again, now you're seeing size come back in again. So you're seeing genuine size come down, hitting the bid and then reloading the offer. You see what I'm saying? So you're not just seeing clips hit into the bid and then being flipped back up again, being flipped. It's actually then they're clipping down and then reloading. So as you can see now we're finally starting to we're having that firm offer. We're seeing prices being held at lower prices, and we're kind of now we're getting a bit of follow through. So again, you're looking, in terms of actual flow and how we're trying to see. You don't really want to see prices back above 34 again, guys. So you see the offer getting pulled on no size, trading back up to 31s, and notice how it just rotates straight back down again. So again, we're just trying to distribute here. We're saying, having all these kind of like no volume squeezes, pullbacks. You just need to be wary of when you actually see like a genuine reversal in the move, or when you're actually just seeing, profit taking combined with, just a genuine thin book. So you're saying, that there isn't really anything on the offer sort of thing. So we've seen some reload 29s, clip down 28s, and now I'm willing to pay down 28s. Now you want to see 28s reload and clip down 27s in terms of, again, so now my stop really goes above 31s, 32s, like on like kind of looking, this is more like an aggressive sort of follow through play now, guys. So we've kind of had the test of 29s, we've ticked it, and now we're sort of seeing if we can hold an offer above it, and then if we can then hold an offer below it, then we can then sort of have some sort of combination of follow through. So again, you notice how the bid on the offer is thin on both sides, but it alternates. So you're seeing the bid reload, then you're seeing the offer reload. But then when you see when it go offered like this, it's going offered on very little size. You're seeing size straight up into the offer, but then when it gets clipped down, it's not as strong. It's not as firm as the offer, if you know what I'm saying. So you're still seeing genuine size paying down at the low price of the day. No genuine size lifting, and then you're seeing people pay down again. So I'm just gonna let you guys watch and see how you notice how I have to be aggressive out on this trade. See, I'm hovering over the bid if we do start going offside, because I have to be aggressive. I can't let this trade do what I did last time and squeeze up to 37s and expect it to roll back down. The whole idea of this trade now is to change in regards to how we should trade out. So my initial, where I actually wanted to see trade down to is sort of between 22s and 20s is the kind of area I'm looking for it to trade through. As long as we can kind of hold below these 30s, 29s, that's the area I'm looking to target. So like I said, as long as the offer's firm and there's genuine size trading into it, and it's been clipped back down into, then I'm comfortable sitting here. I'm comfortable to, take a bit of heat to go offside, to let it distribute in this area, and then, knowing that, there should be some sort of follow through, or you're expecting some sort of follow through on the back of a strong number, on the back of technicals. You're using all the things in combination, guys. You're not just trying to use, one thing to get an edge. And you're trying to, there was a similar trade I showed to the guys in Cape Town when I was out there. It was an ISM trade very similar to this in terms of you had like a really strong number, which then it bounced off the lows, and then we had this really tight consolidation, and once you started to offer underneath it, you had that really quick roll through. Similar to this in terms of how you got the 29s, 30s area, you're looking to like hold under, and then when you want to see it kind of trade out, and then you're looking to target 22s, 20s. As long as you have that price action below, as long as there was no genuine intent to hold prices above 30, above 31, and as long as there was size trading into the offer, and there was someone willing to sit down at lower prices, sit there, absorb prices, and also clip down, then that's all. That's all you can really. That's all you really need in terms of executing on price action in the way I treat. So again, this is quite aggressive in terms of how I'm trading. So you're seeing size back into 26s and you're seeing clip down. Again, you have to be super tight on the trade, guys. Notice my average price is now 28s. Excuse me. It kind of fits in nicely into how this trade should pay out now. So again, it's super momentum aggressive play. Like I want to go one side quickly on this trade. Like I don't want to be taking heat, squeezing up to 30s, 31s again. This trade, if it's going to work, it should pay out now. I've just clipped down in front of 25s. So again, maybe start scaling out 27s, 29s, 30s, but then, it's just a matter of, you should get paid on this trade now that you're holding an offer below 29s and you're seeing size come into the market, you're seeing size paid out in the low of the day. You know where we should start to, where your target is. I mean, I'm being greedy in the sense I haven't got bids in here between 22s and, 20s because I get burnt for it because it flicks down, like you see here, we flick down. And I should be covering here. I should be covering some of my size in here. And then, as you see, we kind of get the bid up, and I have to take a smaller winner than expected. But what I wanted to get to you guys is understanding how we're trading at the moment in terms of you can't really have a perfect trade. Like you can't really. You have to kind of be flexible with it, but like. When you go on side, you have to know what you want to see, and then if you are, like for example, I was kind of hesitant in just holding my size and letting my clip run, and as you see now I'm having to pay up and take a smaller winner than expected, and that's just partly greed, partly not enough conviction, and actually just holding the trade and holding the original entry and letting it run. But this is just how we're trading at the moment, guys. There's not much follow through at the moment. It's quite tightly balanced. A lot of failure at the moment. There's a lot of failure at lows. So when you do have momentum like this, whatever like small momentum you may see, it's about understanding, if you're right, you'll get paid and you'll just go on side, right? So like instead of being me, who's paying down 25s, 24s after already being short from 30s, 34s, you just want to hold your position and let it run, sort of thing, and just understand you have a technical understanding, you have a price action understanding, and once you can just let that run, and then that's all you can do really. But other than that, guys, that's all I really have to show you today in the ladder. What I want to finish up on today, it kind of ties in exactly with the theme of the stream really, in terms of what being a perfectionist and stuff like that, and trying to find perfectionist trades can do to you. It's from this book here, The Golfer's Mind. I mean, completely not trading related, but I mean, there's everything in here is trading related in terms of what you can apply to your everyday game. And anyone who does play golf outside of trading, I'd thoroughly recommend reading it. I'll let you guys kind of read the whole passage, but the bit that I kind of found the most interesting, the small extract, was this bit here. So the whole passage is talking about perfectionists and stuff like that, and perfectionism. And this Dr. Bob Bratella goes on to say, a dash makes the stew rich and flavourful, more than that can ruin it. And it's completely true in terms of if you're trying to find the perfect trade where you want to go on side, you want to just instantly go on side, you don't want to see two-way trade, you don't want to see yourself take some heat, you don't want to see, to get short and then see the price exhaust at a certain place and then roll over. You just want to get paid straight away. And that's... it's not, I mean, a dash of it, like it says here, is great. Like, you're going to try and look for the best risk-reward entries. You're going to try and take the most reasonable trades. You're going to try and, do everything you can to position yourself correctly. But if you try and, do what I was doing in terms of just like, so I'd say I sold at so you had the 29s at this level here, and you were starting to get, so you had the squeeze, and you were starting to get short up in here, you were short down here, you get squeezed, you start selling again up here, then once it rolls over, be short through here, yeah, but then don't cover 2 ticks below the low. You have an area in here, so you have 22s, 20s, a completely reasonable area for it to trade, and it did. It traded 21s. I mean, you wouldn't have got filled 21s, but I mean, just be short here, knowing that this is going to trade. Like, it's not going to be a perfect trade. There was a lot of this on a 1 minute. Like, it wasn't nice. You can go back and look at the chart. It wasn't a nice trade. It wasn't just a straight line. It wasn't just a clean level, break, retest, and puke. It's not trading like that at the moment, and you have to kind of accept that. It's the same as in here. Like, you can't be perfect in selling the low down here and then just giving up here for it to then roll over, and then don't get me wrong, you can set it again down here if you want, but you kind of have to just take some heat to be flexible and to ebb and flow a bit, guys. That's what I'm trying to kind of get out of this debrief today. But other than that, I hope you guys found today useful. Feel free to contact us via any of these means, or follow us on Twitter, follow us on YouTube, or follow us now on Instagram if you want. But yeah, guys, I hope we've all had a good day trading. I hope that was of use for you guys. Hopefully next week I can bring you more of a price action play that we can implement every day, instead of just an example of how to sort of adapt with the conditions. But yeah, guys, other than that, hope you guys will have a good evening, and I'll speak to you very soon. Cheers.